Hello, everybody. My name is Drew Dosek, and welcome to Trading the Close. Please remember to like and subscribe this video. We have these videos for you live Monday through Thursday at 3:55 Eastern Time. All right, so the markets today, they did gap up ever so slightly higher today, and then we had some strong selling pressure towards the first half of the day. A lot of whipsaw action, and this is options expiration week, so you'd anticipate Wednesday having some whipsaw to it, but we really haven't seen that much over the past several months, mainly and really a year, mainly because of zero-day expirations. However, the volatility today was caused by ideas being floated that this administration would end up firing Jerome Powell. Then we've later got a post that's saying, that's not going to happen. But the firing and the threat of firing Jerome Powell really sent investors hitting the sell button. So there was a lot of volatility. And then all of a sudden, when that was cleared up that this administration was not going to fire Jerome Powell, the markets ripped back higher. So we're all finishing green on the day. So let's jump into some of the market summary that you see right here. On the Dow Jones, we're up 0.61%. NASDAQ is up 0.35%. S&P 500 up 0.52%. U.S. oil basically flat on the day. Gold up 0.68%. Bitcoin trying to fight back some of its losses over the previous day. Now, before we get into the heat map, we're actually going to jump into UAL real quick. UAL has earnings after the bell. So I want to give you some levels that I'm seeing here on the charts that could potentially be tagged in after hours trading if you're interested in doing so. So right now, price action on UAL is looking like it's going to close up here at $88.59. We do have first area support down here on this inclining parallel channel at 83.87, followed by this gap fill at $80.18. Now, Delta Airlines reported the other week and sent the price higher on UAL, which is why we're up here above this parallel. Should we see continued momentum, we likely are going to push up to this 102.30 resistance area. So there's the bookend price levels to pay attention to for trading after hours today on the earnings reports. So back into the S&P 500 heat map, we can see here, if we do have a green day, we do have a lot more green on the screen. All of this sector right here in finance was red yesterday, except for Citigroup. As we see here, Tesla has a nice rebound, up 3.6%. Costco and Amazon down 1.3 and 1.67%. Meta down 1.08%. Nvidia still staying green. What can you say? That stock does like to go up. Apple at 0.58% of an increase in AMD, the one shining star right there, 3% gain today. Nice moves there on those stocks. Into the S&P 500. So you can see here today, we were threatening on breaking down. Following up this big red candle, it kind of made sense that we were going to continue to sell off further, but look at how resilient the markets are. We ended up closing above this inclining trend line, but if you notice, if I flip over to the 10-minute time frame, you can see some of the volatility that really took place today. So here we are today when we opened, and then as I mentioned, we gapped higher, and then selling pressure came in, creating a bear flag, and then boom, big sell-off right here when all that news hit with the threat of Jerome Powell being fired. And then that was quickly cleared up right here. As you see, boom, reflex return, nice V-shaped recovery, bullish consolidation, then continued marching higher on the chart. So geez, what can I say? These markets, they just know how to save themselves. It's a matter of delivery of when that news hits the wire. And whatever's going on with this formulation in the past couple of weeks, the markets are still staying higher. Investors aren't rushing to the exit, which is really curious. We've made an extended move right here. It would make sense. Even for a healthy market, you want to see some pullbacks. Those create buying opportunities, which also create more momentum. So regardless, we're still hanging tight up here. Now, one thing to note, whenever you do have a bull flag pattern located at the top of the charts, these bull flag patterns usually fail. So if you look back on the chart, we're at all-time highs, as everyone knows. So bullish consolidation at the highs, that's still telling me we likely will start coming down in the near to midterm. Major support there at 59.42. Next up, the Qs. The Qs here, as you see, very similar price action on the day. Big sell-off, but then a return to go green on the day, ever so slightly. Only up 0.1% at the moment. But regardless, we were down here on the verge of breaking this consolidation. Same thing applies here. Bullish consolidation at the top of the charts usually implies that we're going down. And then you throw in there that we have resistance that we're butting up into. that's kind of stacking the deck for a favor for us to go down. Now, it's just because I'm seeing this, the probabilities still have a small percent chance of going higher, which it still could. But the probabilities are showing me with this chart pattern setup, we're likely coming down to 523.42. Next up, the SMH. Now, the SMH also, notice here, now yesterday we were talking about, could this be a blow off top? It still very well could be. Price action today has not come up and eclipsed the high from yesterday's candle. But notice too, today's selling pressure, we were really pushing down on the charts, coming down out of that parallel, also breaking this trend line. That was going to open the floodgates basically for a sell-off down to 258.03. That did not happen. Markets saved themselves. So far, so good. We're back in this parallel. That means we could go up and tag this gap fill on SMH. Gap fills at 290.80. Next up, the IWM. The IWM saw also a massive recovery today. Price action was selling earlier in the day, did not quite hit this measured move of 215.74, which tells me there's still a chance at price still coming back down here, hitting this area, and then potentially after piercing this area, hitting this support, which will be solid major support for a good reattack of this declining trend line. Support area down here that's the most significant is at 211.15. If we do break to the upside, next resistance is at 229.30. Into Bitcoin. Now, Bitcoin here still mammoth daily topping tail on the charts. Regardless of today's recovery, that still is the dominant factor that's displaying where price is likely going to be going in the near to midterm on this chart of Bitcoin. I'm still waiting for price to come down here at a minimum to 113.278. We'll see if that ends up being the case. And then you throw in the mix too. We didn't have a lot of these cryptocurrency measures passed in Congress this week. It really is resilient to see the return and interest into cryptocurrencies pushing price back above this parallel channel. Very neat move here on Bitcoin, but likelihood we're still coming down a little bit lower. Into gold. Gold here that you see really is still chopping sideways. So there's not too much to report on this, much like yesterday. However, I did add a declining trend line right here, which is giving us a wedge pattern here at the top of the chart. This is all still bullish consolidation. Again, bullish consolidation at the top of the charts usually doesn't lead to a breakout. However, this trend line is going to guide us in the near future to give us earlier insight to see if that breakout is a possibility. Trend line resistance currently at 34.16, support down here on the bottom end of this wedge at 32.42. Next up, we've got silver here. Silver did have a slight rebound bounce today, albeit minor, still following this downward trend on silver. I think silver's got a little bit more downside to go down here to 36.58. From that point, it could be a coin flip. This area will be good support and should provide a nice bounce. But how far that bounce is going to be will be all determined on the fashion at which we get down to this level of support. Next up, we've got U.S. oil. U.S. oil still in bearish consolidation. We did poke lower today, and also just like the markets recovered ever so slightly. That wick is a strong wick, so we'll see here if we're going to end up consolidating in this manner and then end up curling over. But for today, oil did save itself for at least the immediate near term, still targeting this declining trend line down here, roughly about $60 on the chart of U.S. oil. Next up, nat gas did push through. As I mentioned, this declining trend line was going to be a little speed bump for nat gas. I'm targeting an upside here for nat gas right around the $4 area. And it all depends on how many days it takes to get up to this trend line. But that area should be good resistance on the charts there for nat gas. Next up, we've got Johnson & Johnson. Now, Johnson & Johnson, you see here, they did report this morning on earnings, had a double beat, and the stock also catapulted higher on the charts. Now, also, I want to point out, why did price stop where it did today and pull back a little bit lower? Well, it's pretty evident and pretty easy to see if you know some technical analysis. This is one of the easiest things to spot. And so just pointing that out, notice we've got a gap fill right here. Current value of that gap fill is 165.84. Notice the high today got at 166.12. Only about 30 cents higher than what that gap fill was, and then had a decent sell-off too. So that area, look at how it stuck out like a sore thumb too, because when price closed here on this day of March 31st, we gapped lower, opened all the way down here. So this gap was extremely evident. And folks, what I've noticed here in stock trading. Usually when you have a level that's very obvious like that, it is attracting a lot of technical traders like myself. So usually those levels work pretty good, as we can see here, especially with the rapid movement up. Now with Johnson & Johnson, it wasn't up tremendously when the bell rang. It was only up about 2 or 3%, but really buying pressure hit the markets after the bell rang, and Johnson & Johnson continued to push up. We'll zoom into the 10 minutes so you can see that, and you can see we opened here, but then nearly all the way up until, what time is it? 11:50, basically at 12 noon. Then we started to see selling pressure. So there was a lot of vertical momentum here on Johnson & Johnson's chart. That's what we love for trading. That's what we get the biggest pullbacks as displayed here on this chart. You can see we had a decent pullback there, 1.4%, before getting support and moving higher on the charts. Next up, we've got ASML. Now, ASML, I did take this as a day trade today and had minimal gains, because when I did choose to get out of the trade, all that news regarding this administration and the potential firing over Jerome Powell was hitting the markets, and it was really causing a lot of volatility, and markets were selling hard. I made sure to get out with a profit, minimal albeit. However, then ASML really rebounded. We look at this chart and just compare it to last chart, Johnson & Johnson on the daily. It was very clear we had a gap fill, why price stopped where it did. On ASML, it's not as clear. We don't really have gap fills right here where price could have stopped down here at this level, but I'll show you one trick that really helped me isolate down this current level that I did play today. All I did was take the Fibonacci retrace and then look, with this 1 day move and plunge, we gapped over the 236 fib retrace, but look where price stopped, right here at the 0.382 retrace on the screen. If I zoom into the 10-minute chart, you can see here we were actually bear flagging throughout most of the morning. Bear flags are bearish, just like the name. They imply more downside is going to be coming on the markets. And when this occurred, and the longer we were hanging out here, I was like, guys, this just isn't panning out. We need to get out of this trade when we had this little pop. And because, again, it's consolidating long enough, about to turn down, and then news broke that this administration was not going to fire Powell, and then the stock just started ripping. So really whipsaw action and conflicting signals on the chart because of news breaking today. Ultimately, though, ASML had a fantastic recovery, closing the day here at $754.45. Next up, we've got Roblox. Roblox had a nice push today, pushed above this resistance trend line on the charts. And you can notice too, if you zoom back out, I've got fib retraces outlined right here on the chart, showing you where the resistance levels currently are. So we took this high pivot over here from November of 2021, and then we simply just put the low down here. It wasn't that much further away. It was back in 2022, but then Roblox is now continuing to fight to move up through this resistance area. And you notice today, price just catapulted straight through it and then closed above. Very strong finish here for Roblox. But if you notice too, we are overbought on the chart of Roblox. We had a little bit of consolidation, but then continued moving momentum further. So any sort of pullbacks likely will first get support on this inclining trend line, currently right around $111.23. If we see selling pressure accelerate, next stop is 103.63. With this extended move, it's going to be hard for it to keep going up without some sort of consolidation. So if you see here on the charts, the next area of resistance is going to lie right here at this 886 retrace at $127.93. Next up, we've got Rigetti. Now, Rigetti, they came out with some great news today, and you can see it right down here. Rigetti reached 99.5% median on 2-qubit gate fidelity in its 36-qubit system. And it did have a very small error rate. Shares surged 30%, as you can see here on the charts. Fantastic move here on Rigetti. Rigetti actually was starting to stall out right here about $16.50. You notice here this inclining parallel can really contain price action for all of today, except for the last 10 minutes. And you notice when price was really consolidating here, it was getting tired as far as pushing higher on the charts. Great 30% move on this position. Now notice in the after hours, price is continuing to move up. So if we do continue that trend moving higher, next stop for Rigetti is going to be right here on this inclining trend line, roughly about $18.19. Fantastic move here on Rigetti today on the charts. Next up, we've got Tesla. Tesla was one of the biggest movers, albeit here it's still small for the mega cap stocks today. Tesla, as you see, gained right back inside of this wedge pattern. So it was a good move. Yesterday, we closed beneath it, and then today recovered back above. That tells me if we do, and it also closed near the high of the charts, implying we could start moving a little bit higher. Next area of resistance is going to be this declining trend line currently at 337.73. Next up, we've got Meta. Now, Meta held more of its sells today. It didn't recover as much, even though there is a little wick down here at the bottom of today's daily candle. I did want to highlight that we did close beneath this inclining trend line. Now, that's been 1, 2, 3, 4, 5, 6 days basically down on the chart of Meta. I don't think the selling pressure is done yet with Meta. Next, and most immediate area of support for a technical bounce will be basically a pierce of the $700 area, right around 695 with this declining trend line. Better support's going to be down here at 684.63, which either of these areas could produce a bounce to reattack the bottom end of that parallel, which would mean brand new all-time highs again for Meta. We'll see if the markets hold up for that, and we would have to have the S&P 500 also hold up for that. But that's at least showing what is a possibility for a potential bounce play off of this level. Next up, we've got Micron Technologies, MU on the chart. Now, Micron actually did tag some decent support today, created by this horizontal trend line that you see from a pivot high here back in September of 2024. Notice when price was trying to fight to get above it, it kind of stalled for a few days, then accelerated, confirmed above. Now it retraced this scene of the crime breakout. So with this continued fall down, this is a decent fall from this high at 129.82, now having price down here at $116 range. So this very well could be the near-term low on MU, but I'm always prepared for stocks to go lower in case the chart analysis is actually a little bit off, especially because we're so high on the charts. Again, whenever you're buying any sort of first dips into support, I like to go to the second or third levels of support, because usually when prices start selling, they can go further than normally anticipated. So with this analysis, this still is a good potential first entry for Micron to see a bounce up higher, but I would mentally keep in mind that price could go all the way down to 103.76. And the reason for that too, because notice this declining trend line right here. When price broke out of it, it never retraced the scene of the crime down here at this declining trend line. So any sort of sell-off, we retrace this scene of the crime, but let's see if we're going to retrace this scene of the crime. And coming down to 103.76, even though it wouldn't tag that trend line, it would certainly make sense for this area to give a decent bounce, as we have previous pivots all in this area. And this is also the area of the breakout that occurred. So you got to keep in the back of your mind, even though if you enter here, price could still go down to 103.76, be prepared to add and be prepared to pull that average down to capitalize on a potential bounce for Micron. Next up, GE. You see GE's got earnings tomorrow morning before the bell. So I wanted to bring this up to you to give you an idea of basically where GE potentially could go. Now, GE's chart is, simply incredible. With all of the AI data centers that are being built out, GE really saw an influx of capital because these data centers are requiring lots and lots of power to generate and create new AI. So with that being the case, a lot of these data centers are contacting GE and buying a whole bunch of their electrical equipment and securing contracts out for the next several years. So GE has seen an incredible run down here from 159 all the way up to 266 from April till now. But if I scroll back out on the charts, you can see here we're not at the highs. I'm going to have to actually flip this to a larger time frame to show you that. Here's the weekly chart showing the pivot high here on GE. So should earnings come out well on GE, I do think there's a good chance we could go up to this all-time high right at 289.52. Now, if there are not as good earnings, or maybe there's less guidance, a lot of companies are slashing guidance now with their earnings, we could see a sell back down to the 50% area of this parallel, right around 233 on the charts. All right, guys, earnings season is here. I'm excited. Tons of volatility, lots of trading opportunities. Our live day trading room had a great day yesterday and today. So lots of stuff. Can't wait to get back into the office tomorrow and start trading. Please remember to like and subscribe to this video. We want you coming back for more. Get these great trading opportunities. That wraps up Trading the Close. You guys have a great day. Look forward to seeing you tomorrow. All righty. Bye-bye.